I think we can start at this point. So first of all, good morning. My name is Gian-Piero. I'm leading the corporate governance practice at the EBRD within the legal transition team. It is a pleasure to be here this morning in this new setting due to the crisis, to the COVID crisis, to have this webinar that aims to introduce essentially how for board to guide through this storm, to weather the storm, and during the crisis and reaching to a new normal. I think that everybody can see now, I mean, what's the situation. For those that are in London, they can see that shops are opening. I mean, the situation is getting to a new normal. But still, I mean, I think that we will have still a lot of challenges in front of us in the next few months. To lead this discussion, I have a dream team of experts, two from Nestor Advisor and two from Mazars. Just like to briefly introduce them before giving them the floor. Stilpon Nestor is, starting with Stilpon Nestor, who is the managing director of Nestor Advisor. Stilpon is working with us in a number of projects, Albania, Romania, Tunisia, Egypt, Slovenia, Croatia, Belarus, Russia, just to mention a few. Is very conversant in terms of corporate governance. Nestor Advisor is a boutique firm that deals exclusively with corporate governance. Plus, Stilpon was the director at the OECD when the OECD principles of corporate governance were developed, and then they became one of the key standards for sound financial system. David Risser is also in the panel. Is also from Nestor Advisor. He's a director at Nestor Advisor, and he has more than 20 years of experience in advising on corporate governance. He's also working with us in a number of projects. From Mazars, I have the pleasure to introduce Leila, who is a partner at Mazars within the UK financial services team, and she has also extensive experience and track record in risk management and governance project. And last but not least, Phuong, who is also director at Mazars and with over 15 years of experience in financial services, and she's leading Mazars risk management and prudential regulation practice. Before giving the floor to the speakers, just maybe a few notes on how we organize this session. We will have roughly 40 minutes of presentation, which will be followed by about 30 minutes of Q&A. You will be able to pose questions in two ways. One, by writing the question during the presentation in the Q&A or in the chat buttons that you can find at the bottom of your screen, and I will be able to read them loud at a certain point when the QA starts, or you will be able also to raise your hands during the QA, and we will give you the floor to pose the question directly. Final note, the whole session will be recorded and will be made available in due course. It is a great pleasure. Now I give the floor to Stilpon.
Thank you very much, Gian-Piero, for your very kind words. I need to start this. So it's a great pleasure to even remotely be among our friends at the EBRD. As you said, we work a lot with the bank. The bank is on one of our good clients at Nestor Advisors. And in the area of governance. Today's session is focused on the virus. Probably the biggest economic crisis that I have seen in my lifetime. which is longer than most of my co-panelists here, all of my co-panelists, I should say. And so it's been a while. The other thing that you also mentioned, it is important to underline here, is that this is something we do with the Mazars team, with whom we work in a number of other areas. And we believe we bring quite a lot of complementarity to the table as a team. We are focused a lot on the governance side of things. We are, one could say, in a different way, a board advisory, while Mazars knows very well risk and focuses very much on risk and all, of course, of the governance aspects of risks. So we're putting these two together to give you a menu, and with the objective that this might actually help you both as bankers and investment officers, but also as board members for the ones of you that are nominee directors in boards the EBRD has invested in, to weather the storm, as Gian-Piero put it. So what are we going to talk about today? We have four subjects for you. In the beginning, I will say a few introductory words about the process of making decisions in a crisis. What is different in a crisis? What should we watch out for? Then I will pass it on to Phuong to talk to you about the management of risks during this crisis that we're going through. And there's a wide set of risks that she will be talking about, which is the stuff the board needs to do now. David then will, along with Leila, will take over to talk to you about the governance in the crisis. How do we make decisions in a crisis? What is different as regards the standing of directors? What is different as regards the risks of directors? What we should avoid and what we should not. And we'll raise also a few examples. Finally, I will also, in the end of our session, I'll take back the floor to talk to you about the day after. The crisis will end at some point, and we need to be ready for a new world, which I term here post-Coronian, but you can call it anything you like. Martin Wolf today calls it post-COVID. And I'll give you 7 perspectives, in a sense, to map this world and to get ready for this world. So the first and most important element, I would say, in decision-making in a crisis is that it is hectic decision-making. And who was better in dealing with hectic decision-making than Bonaparte? That's why he earned a picture in a slide here. There are more decisions to be made per time unit, however you define it. If it's a day, if it's a year, if it's a month. It is very often, as David will talk a little bit more about, we are stuck with the delegation of authorities for making decisions and the distribution of responsibilities for making decisions with what we had before. And very often, as we see in our practice, this is suboptimal, but we are stuck with it. So the first thing we do is, how do we deal with the delegation of authority that we have in a context of crisis where more decisions need to be made per time unit? Very often, this will take through parallel decision making, multitasking, for which Bonaparte was also very famous. The second element that I wanted to bring to your attention is what I call here foreshortening, borrowing a term from art history. Foreshortening is a technique in painting whereby, while you saw the detail of the present, a lot of detail on the present, or on the forefront. You also saw detail, not naturally, in the background. You see here that a very important element of the Battle of Sant'Uccello, that San Romano, that the Florentine Uccello painted in the 1400s, is something in the background, back here somewhere, in the center of the painting, because this is how the pincer movement took place. So he brings forth the background while focusing on the forefront. This is called foreshortening. That's what we do in a crisis. We need to be very, very conscious of the forefront, of the risks that we're managing at this particular moment, which Phuong will talk about, but also have in mind the day after, the background, in much more detail than before. And why much more detail than before? Simply because the background will be, the day after will be different than what we are used to. Our assumptions up to today do not hold. The third important element in the crisis is what I call the schizophrenia of crisis. What does crisis bring in people that make decisions? It brings two different things. And here, I think the picture here of Charlie Chaplin and the kid in the famous, I believe it was a 1919 movie, is telling. The kid was in a crisis. He didn't have anything to eat. There's no worse crisis than that. So the kid stole, including from Charlie Chaplin. The Charlie Chaplin, on the other hand, was made to be, because he himself was in a crisis of poverty, he was magnanimous. He took the kid under his wing. So we have essentially two different aspects when we approach a crisis. One is some self-centeredness, less commons and more me. I think more about myself, and that can be for a nation to retreat from globalism, for a company to retreat from what it is expected for it in its national environment, for individuals to essentially self-deal and go against the interests of the company they're working for. So there's always this softening of the commons perspective, and therefore softening of integrity sometimes. On the other hand, very often we see that in crisis brings in people what Adam Smith calls sympathetic feeling. Even the worst ruffian, he says, derives sorrow from the sorrow of others. So we are expected here as a company to actually show empathy to the world, more than in periods of crisis. So while we, on one hand, we are driven to be self-centered, on the other hand, we should be and need to be empathetic, because people around us have their empathy levels heightened. So how big is the crisis? And I will before turning to Phuong for our risks here. This is the World Bank's forecast of a few weeks ago, I think a couple of weeks ago, which gives you a perspective of what huge the impact is, and it's probably quite optimistic in my view. You'll see that in the euro area, we're going towards 9% drop in GDP, contraction. In Russia, it's going to be 6%. China is still the only green place there with 1% in a country which has been used to above 6% for the last 2 decades or more. Southeast Asia is minus 2.7, and so on and so forth. The point here is that this is probably still too optimistic. The other point is, of course, that this is nothing like we ever seen. So we have to treat it as a completely new environment, including the day after. The Bank of England told us that it's the sharpest, fastest economic contraction in 300 years. The third element, and I think it's a very important element, is the fact that it's very difficult to forecast because of its size because of its nature of being simultaneously a supply side and a demand side shock. There's a huge, let's say, mismatch in the forecast that we see among analysts. It also, as we will say in the end, most analysts acknowledge, and today the Fed did that this crisis is not going to end soon. We should be ready for a prolonged period, and I will come back to this point. So, what do we need to do on this? First and foremost, we need to address the risk that we're facing today in a crisis as a company. And with this, I will pass the floor, or rather David will pass the floor to Phuong.
Okay, hi everyone. So from the crisis, new risks have emerged, or rather existing risks have changed and they have evolved. And therefore, organizations must understand how those risks have changed and adapt the way they manage and mitigate those risks. So first, let me talk about liquidity risk, or the risk of not being able to meet your contractual payment obligations. So organizations need to rapidly develop a view of the potential changes to the way they normally use liquidity or funding. They need to refresh the cash flow projections with updated assumptions from all the business lines, to have a clear view of their day-to-day transactions in order to be able to optimize the financial operations. They need to perform closer monitoring, which means looking at all the significant outflows, including dividends, suppliers' invoices, debt interest, and see where it is possible to gain a bit of breathing space by cutting some of the payouts, but also renegotiating certain payment terms. Second, I'd like to talk about business continuity and resilience. So business continuity is about how you can ensure that your operations are maintained in a normal or lightly degraded manner. And resilience is about, should you encounter a failure or a disruption, how can you ensure you can resume within an acceptable amount of time, or have alternative options. So the questions here that organizations may want to consider are as follows. What are the functions or the services that you provide where you have limited tolerance for disruption or failure, so that your efforts are directed, are focused to those areas? What could potentially go wrong? So this is about actually performing stress testing and envisaging the scenarios where things could go even worse. Where do you rely on third parties, and have you assess or reassess whether the risk has increased given the new setup in which we are? And what can you already learn from this crisis and take away to be prepared, maybe not for the next one, but for the next challenge, operational challenge that you may encounter? Thirdly, compliance and integrity risk. So remaining compliant with rules and standards at all times, even when those rules and standards change at a rapid pace. We've seen in many industries a lot of announcements, measures taken, and this was shared on a daily basis. So you need to keep up with those announcements and make sure that your decisions are in line with those. So the main recommendation here is that organizations should link compliance aspects with their business response. When you define your business strategy for the time of the crisis or even for a longer term, you need to ensure it is in line with regulatory developments at all times. Your policies and controls must be adequately maintained and must be effectively implemented when taking business decisions. For loss of customers, you need to protect your revenue by taking care of your existing customer base. And that means maintaining the relationship that you have, probably via new channels, different ways, and also looking at the services that you were providing them, see how you can adjust those, or potentially new services that you could provide them with and how you would distribute those. You must have seen many success stories of companies changing the ways they interact with their customers or adjusting their products, their service offering. And I'm sure we will be able to talk through some of those examples during the Q&A because they are quite numerous. 5, cybersecurity risk. So the early phase of the coronavirus crisis posed a challenge for organizations' technology teams as hundreds of thousands of jobs moved from a controlled office setting to remote locations in employees' homes. So in an era of increased cybersecurity risk, it was for sure a time where everyone was very vulnerable and where attackers on the other side were very, very active. The first thing organizations had to do was to raise awareness among their personnel before sending them home or shortly after they were sent home. Companies also had to test the robustness of their network, even if it is something they were normally doing on a regular basis. This exercise had to be redone to a larger extent to make sure that the setup was safe and secure enough. It has been reported that since the beginning of the pandemic, there has been a 5-fold increase, and I think that number is even softer than the reality, in cyber attacks. So malicious actors have been trying to exploit, for instance, human emotions, in particular, masquerading governance announcements, false advice, false charity, including logos and other imagery. So that's an example that you must have faced in your own personal emails, so you can imagine for your company's network how more aggressive it could have been. And 6, reputational risk. So in times of crisis, decisions need to be made quickly, but you need to make sure that the ones you take will not harm the reputation down the line. Bad decisions with reputational impact might be the only thing the public opinion will remember and hold against you once the crisis is over. So one of the key aspects has been around dividend payouts, for instance. Authorities have recommended that firms do not pay out dividends, and most firms have announced that they would comply with that recommendation in the very early days. So that was, and that goes back to what Stilpon was saying, where we are in this all together and thinking about the collective interest rather than the personal ones. So showing that you are willing to contribute to the collective effort in this unprecedented time. So this is about the key risks that have emerged and the way you could have tried to mitigate them. But yeah, in the Q&A, I'm sure we can discuss more concrete examples.
Let me continue, Phuong. Thanks for that. And with Leila, we will explore actually what the crisis actually means in terms of governance, and starting actually with the board members. To what extent the way the board works, and its role has changed with the crisis, to what extent that impacts actually the duties of the board, because you should not forget that as a board member you have a number of fiduciary duty. That's one is the duty of care and the duty of loyalty that we'll see in the next slide. In terms of duty of care, well, it simply requires that the directors exercise their decisions with skills, with diligence, and actually seeking for being informed in making these decisions. In other words, you really have to make informed decisions at that stage. And as such, in a sense, boards have to ensure that they have a reporting framework that exists, that is in place, and that the board is up to speed in order to one, be able to support, but be able to make decisions, and we'll see that the number of decisions the board makes is increases in terms of crisis. And in terms of information, the key aspect here is that the board follows what management's response in terms of crisis, and along the different ways that Phuong has mentioned. One aspect here is that boards have to be able to demonstrate that they are receiving information, and we'll see how they can organize to do so. But as an advice in terms of when you meet, and when you meet both formally and informally, we'll see that there are a lot of ways of solving that. We would advise you really to keep track and keep records of the information you received, and the information that you are following. The point here is that because of this responsibility and this duty that you have, actually, a number of board members in terms of crisis boards tends to seek to be over-informed as opposed to be well-informed. The importance here is actually to focus on a fewer but important aspects, and the aspects will depend on whether the company is either struggling for survival, like travel or hospitality businesses, for instance, or are able to seize opportunities, such as, for instance, online businesses. But in any case, here, the few aspects on which we would advise, and we've seen board focusing a lot of their attention, is obviously on how the board look at how management actually respond to the crisis, and the management crisis response plan on the aspects that Phuong just mentioned around health and safety and operations, but as well how the company addresses potential business opportunities, as a number of them may face the business opportunities. But the elephant in the room here remains actually the financial impact on the company, the liquidity, the solvency. Important here to mention, and that's what you will see in the slide with a number of countries, is that as director, you should remain cautious that the company should not continue trading if you are facing the insolvency situation. And that what is called in the UK wrongful trading, if you know as a board member that the company is not in a position to continue its operations, you should actually stop them and focus on the creditors. A number of countries here during the crisis have suspended the duties for companies to fight for insolvency. Other jurisdictions have made it more difficult for creditors to file for bankruptcy. And actually others have adopted defenses like Germany, Australia, against the personal liabilities. So one advice here would be really to focus on have a look at what the jurisdiction in where you're operating is actually providing as a legal framework as this evolves, and we would advise you to look at to make sure that you are following this. We mentioned the duty of care, to be well informed. The duty of loyalty actually is to act in relation to your the best interest of the company. And here, if it can be relatively straightforward to act in the best interest of the company, in terms of crisis and in some circumstances, this may become more complex and actually more tricky to do, especially if you are part of a group or, for instance, of a family business. We've seen during the last crisis, groups of companies in financial institutions, for instance, where banks actually use some of their subsidiaries that had the liquidity and try to repatriate the liquidity to their parent company. This is something that now the regulators and supervisors forbid. We've seen as well that in family businesses, there is often a tension between family first or business first. And if the successful family businesses have put in place and focus on business first as opposed to family first, in times of crisis, the family first can emerge, and family first mean using the company to provide resources for the businesses, such as actually what Phuong mentioned, dividends, such as salaries, or such as related party transactions. So these are aspects of focus and attention, especially if you are representing minority shareholders. What we would advise you as well is obviously in times of crisis to have a look at how you as a board member or as an executive, you've been covered, and look at your directors and officers liability insurance that help you to protect from claims that may arise from the decisions and actions taken within the scope of your regular duties. So with that, continuing with how the board impacts on actually your role. And one first aspect that we've been promoting here is that in terms of crisis, management needs actually to support. These are times where very few similar challenges are where boards and management needs to be together. Where the board members needs to be both sparring partner, empathetic counselors, and in a time where more and more decisions have to be made. Stilpon mentioned that earlier. More and more decisions have to be made in a time unit. How to organize that limited time and that number of decisions that needs to be made. One aspect is to think of the delegations, and the issue here is that boards don't necessarily, and management companies don't have the time necessary to review the complexity of their delegations. And we've seen that a number of boards meet more frequently, way more frequently than they used to, simply because they have a number of decisions that needs to be taken. So the board meetings and the number of meetings that increases takes as well precious times away from management. So how to organize that decision making and that support? Here there are a few ways of organizing this, where we have seen sometimes boards that for instance, delegate part of their functioning and their decisions to a subcommittee, actually, which can be called, we've seen, the chairman's committee, where you would have both non-executive directors, the one that are available, the one that have the knowledge, and working together with executives in a way, more nimble way, actually. We've seen as well, especially family businesses, but not only, where you have some board members that take part of the meetings from the executive team, simply to be informed, so not interfering in the business and the decisions, but simply to observe, to be aware, because these are decisions that may be actually taken later at the board level, and that helps to speed up the decision making here. And as well, what you could think of is to use some of your board members that here may have a specific as well skills, specific experience, specific knowledge, and that you would help the management actually in taking some decisions in that matter, and in a sense being able to report faster and quicker to the board members. The boards as well as often adopted, we've seen informal memos that can be calls, that can be quick as well, emails, or sometimes using some chat functions from social medias to actually share quick information from the CEOs and keep board members updated, which obviously is less time consuming both from management and helps board members to be updated. Which brings us actually on the communication side, where trust is even more important in crisis times, where boards and managers have to be actually honest about where things stand, should not be afraid actually to show vulnerabilities, and be able to maintain a certain level of transparency to build actually trust and loyalty, which means that communication and intensifying communication is important, and actually not only the management and the board, but as well between the board and, for instance, the shareholders. We've seen, for instance, in family businesses where the board members are meeting together with some of the family members. Often when they're organized in a family council, these are the family council members that meet simply to discuss important decisions such as external financing and their potential consequence about the ownership structure and the control. In a sense, communicating with and mapping with your stakeholders and bringing them together, starting with your employees. We have seen some practices that were already in place in companies where you had aspect of a town hall meetings and gatherings that can be virtual to be repeated, where your colleagues and employees are informed of where do we stand, what we are doing, where we are heading to, and provide this both sense of direction and as well updates as where we are in a situation that changes very frequently. The same way with engaging and communicating with your clients, providing that transparency as to that you, for instance, can continue your operations, and informing them that if any delays needs to be exist, that they are aware. That's a way of actually not only communicating with them, and informing them, but as well a way of getting feedback from them on their own situations, on their own need, and being able to create a closer relationship with them. So that's the aspect of communicating and engaging with your different creditors as well, and if you are a financial institution with, for instance, with your regulators. A number of clients that we've seen asked us about whether the board composition should be changed and whether the board should have experts, for instance, experts of crisis being on their board and join that. One thing that we can say is that changing a board composition takes time. Finding the right board members takes time as well, and you don't necessarily have the time with you. And in relation to crisis, it's actually very much the main responsibility of the management to provide the response, and the board here to support. And if a company is looking for advisors, sometimes it's advisable to have actually the one who are experts in providing response to crisis, because it's a time where improvisation can be costly. I think that's something that helps as well. Actually, should be an opportunity to reflect actually on the knowledge and skills that you found missing at the board level, and adopt and adjust actually your board skills matrix if you have one. In other words, your desired board profile for future hires. You may see that that there were skills missing, but it's more to help you think to build your board later than adjust it in the middle of the crisis. Thinking of as well the composition and the diversity of your board, just want to underline that a number of research shown that now investing in diversity actually help to actually solve problem that you may have, helps to actually have a vision that provides different points of view, that helps to address in a faster way and very often way more effectively than just have a board that is composed of similar profiles, and that's shown from past crises that actually boards and companies in general that have demonstrated more diversity actually managed to rebound faster after the crisis, simply because they were able to address problems from different points of views, and that proved more effectively. So here, in terms of diversity, and I will finish here with that, is it's a way of something that you should be addressing now, even if these are not necessarily on your most pressing needs, but where you would find actually a way of as well talking about reputation, a way of actually being better positioned, being actually closer to your customers, and actually enhancing your reputation as you will continue. With that, I will pass the floor to Leila.
Thank you, David. So yeah, to continue from what David was saying, we are looking here at how the current crisis, what that has meant, sorry, for organizations in terms of adapting their approaches to risk governance. And here we have represented the traditional 3 lines of defense model, with the first line, so that's typically the operations, the management of the operational management of the business. And the second line, usually the risk and compliance teams. And the third line, and that's usually the internal audit teams. What we observe in the current COVID context is risk governance functions have had to become much more dynamic to respond to a very fast emerging, very fast evolving risk. And what this means practically for the internal audit functions, the third line of defense, is that they had to review their 2020 audit plan and to incorporate any risks emerging from COVID or increasing in their intensity. For example, around fraud or IT resilience, as Phuong mentioned earlier. They also had to focus on areas of higher immediate impact, so those that can impact on the survival of the business. For example, internal audit had to challenge the scenario analysis and assumptions taken by the business on the extent and duration of the crisis. In addition to its assurance role, internal audit also has to play a growing advisory role during the crisis. They have this ability to step back and span the horizon and anticipate future risks. So not current risks necessarily, but those that might emerge because of a change in consumer preferences, for example, a greater focus on sustainability in the future. And they can then advise the first and second line of defense teams on these emerging risks. At the second line of defense level, the risk and compliance function needs to set up a dynamic process to consider actions and guidance from the government. That also has been mentioned a bit earlier in this presentation, and support the company's crisis response. And this needs to be executed with much more urgency and less bureaucracy than usual. So, for example, right at the beginning of the crisis, of the lockdown, compliance had to revise their policies in a number of firms to allow the business to carry out customer due diligence checks without seeing the customer face to face, especially for high-risk customers. Now, with the lift of lockdown, compliance has to issue guidelines for the business to perform risk assessments and decide whether staff members can commute and work safely in the office. For those who operate in the financial industry, regulators have provided relief in a number of areas. However, compliance has a role to play in continuing to engage with the business and to support the firm's overall culture of compliance and ethics. And it's also important for senior management to clearly communicate the fact that compliance remains a key priority for the business, with zero tolerance for any kind of misconduct. More broadly, I think we can say that there is much more open communication between the three lines of defense. The first line seeks input from risk and compliance more proactively, and there is also closer and more interactions between the three lines of defense to ensure that their response is aligned. So if we move on to the next slide. Can I do this? Thank you. Someone said that a crisis is a terrible thing to waste. And beyond risk management, we really wanted to draw your attention to the fact that it's important to think about the opportunities brought by this crisis and to seize them. Successful firms are going to develop new business opportunities during the crisis. And whether it's to cater for new customer needs, to put in place new collaborations with other firms, or to reshuffle geographic coverage, it's really about striking the right balance between cutting costs to survive today and investing in the right place to grow tomorrow and do well after the crisis. And to illustrate this, we can take the examples of two companies during the 2000 recession. So that was Office Depot and Staples, two office supply retailing companies. So Office Depot decided to cut 6% of its workforce during the 2000 recession. On the other hand, Staples closed down some underperforming facilities, but they increased their workforce by 10% during the crisis. And that was mainly to support newly introduced high-end products and services. And sales increased much faster for Staples, that invested in its workforce, than Office Depot, who focused on more on cutting costs. And Staples was about 30% more profitable than Office Depot in the 3 years after the recession. They came out of the crisis stronger, bigger, and more profitable than they had been before in 1999. Another example is one of our clients. It's a doorstep lender. So their business model is really reliant on face-to-face business being conducted in the customer's home. So obviously at the beginning of lockdown, any kind of lending and cash collection activities was frozen. So within 2 months, they have developed an online portal through which they can reestablish lending activities, something which set them apart from even the biggest players in that sector. The last important point to keep in mind, it's never too early to prepare for future shocks. The current crisis is an opportunity to improve your company's resilience. And we know the question is not whether there is going to be a next crisis, but when the next crisis is going to be. So we know also, I mean, we don't know if it's going to be another fast emerging risk like a pandemic, or a more kind of slow burning crisis like the crisis of climate change, or something completely different that we don't even have in mind right now. But both are well positioned to ensure that companies are learning the lessons from the current crisis, and that they challenge risk management to improve robustness to respond to the next crisis. Thank you. And I think I'm handing back to you, Stilpon, now.
Well, after this tour of the horizon on the current challenges, both from a risk perspective, from a governance perspective on how making decisions, but also from, as Leila was just saying, from the opportunity perspective. Let me now go to, in our foreshortening paradigm, to the background, not to the battle as it takes place, but to what's happening back there. And back there is, of course, for us, the future. I would like to offer you 7 perspectives, which I hope will help you as a board member or as a decision maker for the future of the company to map the new era. And these are perspectives that will fit in different ways and at different degrees to every company. Let me start, since we are speaking with an EBRD crowd, who is an international bank by definition, by it's in its DNA more than anyone else's. I'm not okay. With what I call interconnectedness. And interconnectedness means that in our world, very often, both the inputs, but also the outputs of our business are globalized. We live in a period of globalization. And actually, this period of globalization is to a degree endangered from trends, from populist trends that had started way before the crisis, but risk to be exacerbated during the crisis. In fact, we are standing in a fork right now. We either organize this interconnectedness into more globalization and a more open environment for business going forward in the future, or we go towards closing it, which I'm sorry to say has been the mean, if you want, in history. Sort of a closing societies, nationalism. That means many things for the business, especially if we have aspirations in the international sphere in terms of trade and investment, or we depend on supply lines that are international. There's a big effort right now in many levels of nearshoring, of bringing our supply lines closer, which of course will exacerbate the closing of our economies. The other, of course, is remote funding, is whether you are an investee of a DFI, which will, at least in the foreseeable future, as signs say, will increase their lending, or you depend on international wholesale funding markets if you're a big bank in an emerging economy or in an EBRD country of operation, then will this be available? And finally, a lot of you wonder, what about ESG? ESG is another standard that international investors and providers of investment and funding might increasingly put to the fore. What will this crisis mean for ESG and in your particular country? Clearly, there is a focus on the S of ESG, on the social. It is by now the first time that the so promoted recently stakeholder company will face its first crunch time. And we will see whether indeed companies can be run on the benefit of their stakeholders. Environment, will environment suffer? Because when push comes to shove and there's little money to go around, will that money go towards environmental improvement or not? All of these are big questions, and for many companies, actually existential questions that the board needs to take into consideration. The second area that I wanted to look at is what I call macro-political economy. And here is how, from a board's perspective, is how what is happening in the macroeconomy around me will impact my business. Of course, the first one is that debt is increasing exponentially from already very high levels, both at the sovereign and from a private perspective. And this will have a lot of, will produce a lot of, or alter the trends very much in the immediate future. If you are, of course, from any perspective in the funding of things, you will see that in lending, you will see that your asset quality will deteriorate, and you will need to start getting ready for that, for this asset quality deterioration. We already see unprecedented levels in the increase of provisions in some of the world's largest banks by a factor of 3, 4, 5, 6, 8. in certain cases. The other thing that this debt overhand might create is the temptation and actually the desire from policymakers to increase inflation. And we have seen that in the 70s. Is that another case? If so, am I vulnerable as a business to inflation fears? And what can I do about it? The third one is we also seeing, especially in developed economies, in OECD economies, a huge state support being funneled to the corporate sector. This, of course, again, will create new issues both in the market where the support is taking place, and issues in markets where competitors of the companies that are taking the support is taking place. Issues of a level playing field, and what can we do to address it. Finally, of course, the deterioration, the budget deficits that this crisis implies or brings about will eventually might result in most onerous taxation. Do we have any way to do anything about this? The third area is a little bit more intangible, and it has to do with the way we perceive risk. And this is important because the way we perceive risks drives our decision making. And here, availability bias is a standard in a crisis. We always manage to yesterday's risk because our mind is so full of the COVID-19 crisis that we cannot really see beyond it. And this might result in risk aversion in the economy, both on the banking side, but also on the company side. This might result in lower levels of entrepreneurship in the economy. Again, all these are areas that we need to take into consideration in mapping the future. Companies will rely more on retained earnings because of this risk aversion, which might have an impact both on the demand, but also on the supply of credit, given the deterioration, as we spoke before, of bank balance sheets. Going beyond the perception of risk, the preferences of the computers themselves will change and are changing. First of all, everything that has to do with health is altering demand and distribution patterns. On the retail sector, we see, I just went for a walk in our first day here of opening the non-essential stores, and you can see that the stores are essentially empty. The few of them that are not have long queues outside and will be making much less money. So all of these things, consumers are very cautious. Some people are saying that this will bring a general, what I call the new frugality here. People will start behaving as they behaved after the war. They will be saving things, saving food, saving essentials, not buying above. And I lived all of my life in an era of hyper-consumerism, which has been driving GDP growth. Will that change? The fifth trend is, of course, accelerating technology, and we see that all around us. We see that in the health sector. We see that in the technologies that support what we're doing today. It is interesting to note that the most successful IPO during this period, and there were a few, was in this space. So technology is doing very well. This might give us also opportunities in the narrow field of governance. A lot more can be done now and can be accepted to be done remotely. AGMs are being organized remotely. Board meetings, clear, there were before, but nowadays we are perfecting techniques and people are becoming comfortable with it. Which might mean a lot of things, might mean that a lot of businesses that until now relied on local talent alone because it was difficult to service them, can actually have access to better talent. The sixth area is the future of work. very connected to technology. Again, I don't need to talk too much about this. We all work from home. The bank will be working from home for a while, I hear. And that will have significant impact in many sectors. I talked about some of the positives. The negatives is, of course, that you will have a lot of office supply, commercial real estate, related services, office services, education. All of these things will be impacted. And this might generate other needs in the future. Can we take advantage of any of that shift? Is this something that will hurt us a lot? Again, if you're a distribution business, a retail business, you might be hurt. Another long-term trend has been sort of the substitution of human by robots. Will that be impacted as well? It is very possible. Robots do not transmit coronavirus. And if this health scare goes on for long, we might see that. Last but not least, all of the previous areas sort of flow into one big river, and that's the role of the state. And the role of the state is, again, like after the war many years ago in Europe, becoming much bigger. A lot of us, including myself, have worked a lot in our lives in the area of privatization, of involving the private sector more. Well, this is an era, I think, that the state will get back the reins. What does this mean for our business? Are we going to be frozen out? Again, because we're not well placed to deal with government, or are we well placed? What will it mean for our competitors? All of these are things that we need to address. And this is the last slide of the presentation. We took you we kept you a little bit longer than we wanted before we started our discussion. And here is, of course, where are we today in the crisis? I want to put this into perspective a little bit. We are in what I would call sort of the three overlapping cycles of this crisis. We are probably in the middle of the first one, even though people think that, and look at the numbers of last month versus April, and they make conclusions. I think it's way too early to make conclusions. We are still struggling, or a lot of businesses are still struggling to stay liquid. They got the support they needed in some countries, in others they have not. While some countries are still seeing the health aspect of it all being priority number one by far, because cases are going up. The further away one goes from London, the more this seems to be the case in the emerging and developing world. The second stage will be, of course, staying solvent, having a business, essentially. And that can be impacted very much about the 7 factors that I mentioned, which will, of course, then lead us to the third area, which means if we are resilient and survive the first 2, we need to rebuild our business according to the new requirements of the day after. All of course, this will not happen if we and our teams and our people will not stay healthy. So this is a primary concern from every business, from our business here in Nestor Advisors and Mazars, I'm sure, to the bank, to every business. So this becomes, again, a requirement, if you want, for resilient and success. And with this, I would like to thank you all very much. And of course, there's some resources that you can use that we put up there for you. There are many more, of course, and you will be able to access all that in the recording of this webinar that Gian-Piero mentioned will take place. And with this, I would like to thank you very much on behalf of Mazars and Nestor Advisors, and pass it on to Gian-Piero for our discussion.
Thank you very much. A very interesting presentation, and I should also mention a very nice, diverse and gender balanced panel. I mean, we didn't mention this before. So now is the time to pose your questions if you have any. I think there was already one question on ESG that was briefly touched by Stilpon in his presentation. I also have a question myself, if I may, and I was struck by the term foreshortening that you mentioned, I think in the second slide, and which I think is quite interesting. And I remember there was a movie in dealing with the financial crisis. I mean, it's where Jeremy Iron was the CEO of an important bank, and it was mentioning that my role is to see the future. The role of the CEO is essentially to predict the future. How can the board, especially when it's swamped by the immediate need of the crisis, find also the time to see the future? I mean, how can we make this foreshortening happening? And maybe also related to this, how can we protect the sound business by avoiding that within this acceleration of dynamics that is due to the intensive work of the board because of the crisis, something is sneaked into the board agenda, which is not really appropriate and might not be really, relevant for tackling the present and the future. I think that there is always this risk, especially when the agenda of the boards and the discussion get exponentially high. Mm-hmm. And of course, feel free to write your question or raise your hands in case you want to pose your question directly.
Gian-Piero, I'm not sure I have the right answer for your question. It's a difficult question, and everything is difficult in a crisis. Essentially, for shortening, it means that you have to do both. I think David in his slides mentioned a few techniques, and it was just a very general reference to them, of actually letting management and supporting management dealing more with the present. In fact, I can put it in more blunt terms. A crisis like this is the time where the board needs to support fully management. When the board lets management act through various techniques that will always depend on the delegation of authority, because very often the board needs to make too many decisions. And these decisions need to find a way to be made easily. And that was David's slide about ways to make this easy. At the same time, when the board can organize its time in a way that not so much with management, but on its own, starts thinking about the day after. It is a practical question. It is a question of organizing one's time and making sure that the people who deal on the day-to-day with the present have the time and the space to deal with it. So this is not the time to demand very detailed sort of packs of information about business planning of the future or anything. It's the time to essentially map the future, come to a certain understanding at very board level where we want to go, and that can be done without wasting too management's time. And then once management's time starts in the second cycle that I mentioned, where of stabilization, in a sense, starts to become less demanding from the very high levels, then the dialogue between management and board can start. I mean, that is a general way of answering this question.
And just a technique to complement what Stilpon said is we've seen a number of our clients that these last months obviously were focusing on the emergency and that are now that they are kind of having a view on their financial strengths, a view of how their business is going, are now thinking of how to organize and think of the future and adapt the business. But to do so, they are planning specific sessions. So the technique is to distinguish in your board agenda and in the time when you meet, actually when you are dealing with the immediate and with the support of the management, and from the time when you are looking a bit more forward and thinking of the strategy. Meaning here, I know two companies we've been working with where they're organizing actually board retreat dedicated on strategy this summer.
Thank you. There was a question about ESG, and the question is to David. You mentioned addressing of societal goals for the day after and mentioned diversity. What about ESG in general?
So I will start because the question was asked to me. So thank you, Hannes, for asking that question. I think Stilpon addressed that as well in his slides, where the question is about currently an important focus on the S. When we are thinking just before about the business actually and the business model of companies and how to rebuild it, you have to think of the environment where obviously that's potentially a source of the next, if not a crisis, but in a source of major disruptions that were already on the agenda of a number of companies before the COVID crisis that will simply now accelerate because potentially the business models of a number of companies might change because as well the concern of the consumer will change, and these are aspects that I think are more accelerating potentially the concern on the environmental aspect than putting it more accurate on the agenda. That's something that already existed, that now companies have to think of, a plan, and integrate in their business. So all of these are definitely important topics to address by the board, not to be caught by surprise.
Let me add something here to what I already said in the slide on ESG and to what David just said. Our answer on the diversity side, but also on ESG, is that these are key societal concerns. Improving our environment and addressing climate risk, even though it's a systemic risk and that investors are worried about and have to sort of, in the context of their stewardship, and in this I'm talking general, not only for institutional investors, but also ways like the bank have to address it. These are big societal concerns. My big question mark is whether we can still rely in the pre-crisis balance of asking companies, essentially, and the private sector in general, to take on this agenda on its own, mostly, or whether, along with everything else, in the new normal after the crisis, this is an agenda that needs to be addressed more by the state and the government, given the very squeezed resources that we will see on the private sector, which was part of what my question was in the presentation. Will the private sector be in a position, actually, to assume the additional cost of addressing a systemic risk further down the line after the crisis? This is a big question in my mind. I don't have an answer, but it's a big question.
Stilpon, if I can just add to that, I think in line with what you just said, the Commission, the European Commission has issued its new strategy for sustainable finance, and clearly the focus is to to make sure that the financial industry, but the economy, all sectors of the economy, are going to contribute to the transition to a low carbon economy. There's also a bigger focus on biodiversity. And I think one of the reasons behind that is that we know from scientific evidence that there's a link between the emergence of pandemics and the loss of biodiversity. So if we want to be a more resilient society, these are issues that we have to address. And I agree with you, Stilpon. I think the government and the supranational authorities have a key role to play in this. And I think the Commission has shown clearly in the midst of the pandemic that this remains a long-term key priority for at least at EU level. So clearly, I think for businesses, this is something that you need to keep in mind. It has to remain on your agenda. Yes, there is the urgency of surviving through the crisis, but the day after, clearly, these are going to be critical issues.
Mm. Yes, I agree with you. Even though I'm a bit familiar, Leila, with the framework that you're talking about, but this and everything else we've seen, including the stewardship code here, and so is still dates from the pre-Coronian period. We are still operating a bit with the availability bias that I mentioned. We're still thinking that the world will be the same, and it might, but it might not. And I'm wondering if it is not, what this will mean in the future. Sorry, Gian-Piero.
Yeah, there has been an additional comment. Thank you very much for this. There's been an additional comment by Daniel. I would argue that looking at the horizon remain an E focus. Companies looking to future need to remain focused on E as an opportunity and risk. I think this comment fits well with our discussion. I may add, and then I will leave it to you to how to respond to Daniel. I would add that in my understanding, when we're talking about ESG, we have an evolution of the governance concept and the corporate social responsibility, where the G serves possibly as a pillar, as a fundament in order to promote ES, in a sense that without a solid governance structure in place, everything that you do in terms of environmental, social remains up in the cloud. But only if you have a strong governance framework where all parties have responsibility, define function and dynamics that can serve to build and support the ENS, then you really have a functioning framework. But the comments by Daniel was mostly on E. I don't know if you want to react on that.
I think, if I may, I agree with that. I think E is definitely remaining a key issue. I think in terms of focus, a key priority for governments and businesses. I mean, COP26 was going to take place in Glasgow this year. It has been postponed to next year. But I think in the meantime, governments are continuing to work on their commitments to meeting the Paris Agreement targets. And it's going to be interesting to see what commitments will be taken next year when COP26 does take place. I was also going to say, I think the focus has been on E for a long time now, mostly on climate. Now we're adding biodiversity. What I think this crisis is doing is it's kind of rebalancing the focus and adding the S in the middle. I don't think it's pulling E away from the equation, but I think it is adding to it. And I think realistically, what we have seen in France as well with the Gilets jaunes movement is that you can't address environmental issues in an effective manner if you're not taking into account societal issues. So we need to make sure that the transition to a more environmental friendly society is also fair, and that's where the social kind of S focus is also important.
And this fits well within the last comments that I just received. What about labor relationship?
Yeah, I mean, very much. I think it is also an issue with this crisis. Employee relations are key. How have companies reacted to the crisis and making sure that their employees are working in health and safety in line with health and safety standards. It's not just about physical health; it's also mental health. That the crisis has a big impact potentially on mental health. And I think we have seen a number of companies taking action in making sure that employees isolated at home are looking after themselves. We've heard, I think it was Citibank who gave an extra day off to their staff recently. So these are kind of issues that companies have to look after. I think the Black Lives Matter movement as well is something where companies are taking a stance and making sure that they are addressing these societal issues. I think all of this happening in this current pandemic is probably taking in a different dimension because everyone is sitting at home and maybe having more time to watch the news and maybe being a bit more sensitive as well to societal issues means that companies have to adapt and maybe get involved in topics that they haven't necessarily addressed in the past, or in a more active and more proactive manner, I would say.
I would agree with that, and I would add to what Leila said that you know, as I think I said in the day after slide, this is now really a crunch time for all these companies, including the U.S. Business Roundtable, the biggest companies in the U.S., for people that have supported the new UK governance code here about purpose and employee workforce voice that is now standards in this country, to prove to us that this is not just a communications exercise, it's crunch time. And I think that society is more sympathetic now, to use Adam Smith's term in the beginning. They are expecting companies to share their pain, to share their sorrow. So they're all focused on this. And you know, Phuong also was saying about funding side of paying out dividends. There's a huge reputational risk on paying out a lot of dividends right now, at the same time putting all your employees in furlough or laying off a number of them. In the end of the day, somebody will do the bill between all your payouts to management in terms of compensation and the shareholders in terms of dividends, with your payouts or negative or positive on your stakeholders and especially your employees in this difficult case. And this is, I think, a bill that will be drawn at the end.
And this might have some relevance also on this, your 7 points on the role of the state. But this might be subject to another webinar. Time is up. I mean, I would like to thank you very much for your insight, for the discussion. Thank also to all that have intervened, that have listened to this webinar. It's been a pleasure, and we hope to see you remotely soon, maybe with other events. Thank you very much.
Thank you.
Thank you.
Thank you.